name on the heat check here is SYM, Symbotic Inc. This company, if you don't know about it, specializes in AI-powered robotics and automation systems that are tailored for supply chain and warehouse operations. Their solutions aim to enhance efficiency and accuracy in inventory management. One thing you want to be careful about this company in particular is they're currently operating at a net loss. So you want to be kind of careful. But with that being said, they do have $903 million in cash, at least as of the last reporting. And revenue guidance is still pretty decent. So this is a name where you could get a turnaround play here. Now, again, you have earnings coming up on the 7th, so 2 days from now. That is obviously going to impact this, especially because they are operating at a loss. And remember, these companies that are growth companies in this environment tend to be criticized a lot harsher when they miss or when something happens because they're not generating a profit, right? They're not making money yet. They're making money, but they're not turning a profit. So if they're not turning a profit yet, when they have a loss or they don't make as much money, it could be seen as a huge detriment. Now, what I like about this company, and this is part of the hype that we're seeing on social media, they have a Walmart partnership. So they actually acquired Walmart's advanced systems and robotics business, which is pretty cool. And they entered into a commercial agreement to deploy automation systems all across Walmart's accelerated pickup and delivery centers. So that gives them obviously a huge in with Walmart, one of the biggest retailers in the country. Obviously something to be very knowledgeable of if you like this kind of play, if you want that kind of retail exposure. Flip side of that, depending on their agreement, which I didn't dive too deep into, we don't know how, for example, if there are fewer, we don't know if they're paid per pickup or whatever, per delivery. So I'm assuming that's not the deal. That would be your one concern because of tariffs. I'm assuming that's not the deal, but if that was the deal, that's something you want to take a look into. Another reason why this company is getting a lot of hype online right now, they posted impressive Q2 results. Earnings per share came in at 32 cents, which was okay, pretty good. And revenue surged about 59% year over year, which is great. And again, with companies like this, you need to see growth. Year over year right now at 424 million. Pretty solid from the fundamental standpoint. This is one of those growth names where I don't hate taking a stab at it, which is why I wanted to bring it up. Now, again, it is getting some hype on social media. The volume is not really even reflecting that. Obviously, you have the tariff low volume here, but outside of that, volume is actually pretty standard. But people have been talking about this name, which is why I wanted to bring it up. Market cap on this one, 13 billion, almost 14 billion, so pretty decently sized company. The other thing you want to be knowledgeable of with Symbotic is that Vanguard actually increased their holdings by 41% on this company. They own 5 million shares of Symbotic, which can be a good and a bad thing. Obviously, if Vanguard is buying shares, they think it can make money, right? Vanguard does not buy shares in companies to lose money. With that being said, Vanguard can also dump shares, right? So there is a risk factor to that. If we zoom out on the monthly chart here, I'm going to talk about some levels here momentarily, but we're in an interesting spot where, depending on obviously where Vanguard added yours, I think you're at a pretty fair evaluation, all things considered, from a technical standpoint. And I think the upside is actually more favorable than the downside on this name, which I will talk about momentarily. I guess I have two more notes here. They've recently expanded their reach with new installations and signing their first ever logistics as a service customer. So now, since they're doing, so if you're interested in AI, this is a company for you with robotics and automation, but they are also working as logistics as a service. So instead of just software as a service, they have logistics as a service. So imagine you run a warehouse and you don't know how to get goods from point A to point B. This company is looking to get into that field of doing all the logistic work for you. So that's something that's very interesting to me, especially with the AI side of things, obviously growing industry. Could be a very interesting name depending on how that platform plays out. Even if you don't necessarily want to invest in this name, I think listening to this earnings call in particular could be very interesting, as I'm very peculiar on this company. And obviously, because of this, they're positioned to benefit from the increasing demand from automation in general, in logistics specifically, and in supply chain. So obviously, we're still seeing, I shouldn't say obviously, we're still seeing issues with supply chain from COVID. We have not recovered from it. And companies are always wanting to improve their supply chain in general. And this is a company that could actually help them improve their supply chain and lower costs at the same time, which is a win-win. If I'm a business owner and I have a warehouse and I want to make more money by lowering my costs and make things more efficient, why would I not be a customer? Why would I not be interested, at least in what this company is offering? So with that being said, let's look into the technical side of things. And again, remember that we have earnings on the 7th. So earnings are 2 days from now, so be mindful of that. Currently trading $23.44. You have your POC down here at around 21.83, and I have my lower LOI here at 21.38. Now, that being said, like I said earlier, the upside on this chart is more interesting to me than the downside. We actually have two gaps open to the upside here between 27.58 and 30.12, and this last gap that wasn't filled yet at 36.63. So there is a decent upside gap here to fill. My last LOI, at least near term on this chart, and when I say near term, I'm saying like the next 6 months or so, would be 40.83. That's what I'd be looking at. To the downside of things, like I said, you do have that support here at that 21.38. Then you have this 19.25, and finally, I wouldn't risk lower than 17.11 on this name in particular. So a little bit wider risk than I typically take, but that's because the reward is wider. So let's take a quick look at the risk to reward and calculate it here and kind of get an idea of what that could look like. So let's pretend I bought shares today at 23.51. Whoops. 23.51. Let's say my stop is at 17.11, so worst case scenario. And profit best case scenario, I can't see because the thing's in the way. It's 48. It's like 40.80, something like that. 40.83, close enough. So your risk to reward's almost a 3-to-1 risk to reward, mainly due to the fact that you're risking a 27% downside here, but you got to keep in mind that earnings are in 2 days. So if you're risking it, you're risking it for the biscuit here. You're getting a wider range on risk, but at the same time, the reward is a little bit wider. So you do have a 27% drawdown if earnings are poor, but if earnings are good, and again, this is more longer term, I'm thinking like 6 months out, you do have the opportunity to go all the way to that 73% gain there. Now, if we pull this down to about that, if we wanted to be more conservative and just look for the second gap to fill, you still have a 2-to-1 risk to reward, which is still pretty great. And this is assuming a hard stop at the 17.11 area. If you want to be a little bit more conservative, you put a stop at that 19.25, which is right around there. Your risk to reward's almost 3-to-1, only assuming that first gap fill. And if we push up to that second gap fill, 4-to-1. Pretty good risk to reward, all things considered, on a name that I think is at least interesting. So if you have an interest in logistics, in AI-powered robotics and logistics, this is a company that's on the heat check because of their positioning right now, because they have earnings coming up, and because of how they're sitting in the market. This is a name where I would highly suggest you look into and see if it's the right exposure for you, if that's something you want to consider. Regardless of how the earnings go, if it does see some bearishness in general, depending on your risk exposure, maybe something you'd like to consider. $14 billion almost market cap company, so it's fairly big. So I wouldn't expect a move all the way down to the 17.11 unless they had some sort of catastrophic news. Realistically, the 16.21 would get tapped if it was something pretty bad. And realistically, off the back of earnings, if there was a really good report, this 26.15 would get hit and then would kind of fart around a little bit. So if you want to make it super realistic, and again, if you're a near-term trader, this is what it would look like. Your risk to reward is actually bad. It's under. You're risking more downside than upside if you got in today, right now, with that minimum price target there, that first price target at 11%, risking an 18% downside. So that would not be good. So depends on your risk. This is a name I'd definitely keep on watch, and you can see why people are very hyped about it on social media. And yeah, that is Symbotic for you.